and we need number of life, right? So what is the formula? Formula is cost minus residual value divided by number of life. So cost, we already calculated, so this will become the cost. Residual value, the question mentioned it is 5,000. Right? Here, 5,000, right? So now we calculate the number of years. So question says, they have increased the the estimated life 15 years, right? And right now you are at the start of year 8. So in order to calculate the life, many questions ask how this 8 is coming from. So you just point out your position, make a timeline. This is you, sorry about my drawing. So make a line here. So you are at 8 year, and now they have increased from 8 to 15. So 8, 9, 10, 11, 12, 13, 14, and 15. So you start from here, 1, 2, 3, 4, 5, 6, 7, 8. So this 8 is coming from here. So many students, they are, they feel difficulty how this 8 is coming from, because we are at the start of year 8, which means whole year depreciation going to be included here. Cost we have calculated, residual value already given, number of life already we have calculated. So formula is simple: cost minus the residual value divided by number of years. So 160 minus 5,000 divided by 8. Answer is 19,375. So Ella, you understand now?
Yes.
So now from this year to onward till year 15, when this actual building is going to be depreciated, you will make this entry. Entry will be the same, but figure gonna be 19,375. Depreciation expense to accumulated depreciation. Simple. Right, Anthony? Now you understand? Marilyn, Nam?
Yes.
Good. So you see here now fully depreciated asset. What happened? If an asset is fully depreciated means we are no longer using it, and if it has a residual value, we will sell it and receive the residual value. If it's a zero residual value, then at the end accumulated depreciation must be equal to the cost. We purchase the asset for 60,000. If accumulated depreciation exactly equal to the value of purchase cost, it means book value is 0, so it's fully depreciated. We are no longer using that, right? And after its fully usage, no depreciation entry gonna be recorded. It's just like a waste, we just dispose it, that's it, right? So it's not like that we will still, it's not like that we will still going to record depreciation after some time. Okay. my God. Why it is not charging? Amazing. Okay. How many? I'll try my best. I don't know why I cannot charge it. Strange. So let's back to our class. If my battery down, then I have no other option. I will be informing you on my WeChat. Okay. Now, what if we want, at the end, we will sell the asset, we will dispose the asset, what will happen? So when the depreciation is up to date, you measure the asset's final book value and it record the expenses up to the date of sale. And at the end, removal of the asset gonna be having a reverse entry. So it looks scary, but let's see the example here. So suppose final year's depreciation expense has just been recorded for a machine that costs 60,000. So we purchased the machine for 60,000. It has no residual value here. The machine accumulated depreciation thus total to 60,000. It means its maximum accumulated depreciation is still the value of the cost. So assume that this asset is junked. You need to make entry for its disposal. Here is the entry. Simple. You make a reverse entry for accumulated depreciation. Make a reverse entry to the asset entry. That's it. Right? Because you need to delete the asset from the balance sheet. And when you delete it, make a reverse entry. Asset decrease, credit. Right? Machinery is going to be decreased from full value. Asset decrease, credit. And now accumulated depreciation increase because accumulated depreciation is contra account. Increase in accumulated depreciation is credit. Decrease in accumulated depreciation means debit. So you make a reverse entry, that's it. Logic I already explained you. Decrease in asset, increase in accumulated depreciation. Right? It is just when you asset is fully depreciated and now you wanna delete it from the balance sheet. Make a reverse entry because you cannot throw the asset like that. You need to show it to the accounting procedures through formal, entry that we finally dispose of this asset. So, disposing an asset which is not fully depreciated means it still have the book value, and now this asset is for no use. Now we are throwing this asset away or selling this asset whatsoever. So how entry is going to be recorded? Here we go. Suppose FedEx disposes of the equipment that costs 60,000. They purchase the asset for 60,000 and its accumulated depreciation is 50,000. It means it still have the capacity to be used for worth of 10,000 or its book value is 10,000. Now, if you want to junk that one, or if you want to dispose it, the result will be a loss, because we still can utilize this asset worth of 10,000, but now this asset is worthless according to our books. Still 10,000 value is there, but it is worthless. So how we are going to make the entry? We will make this as a loss. So our asset is fully depreciated, 50,000, right? So decrease in asset will be 60,000. So difference is loss, or maybe you can call this loss or expense treatment are the same. Expense increase, debit. So loss on disposal of equipment. So this expense, we will not write it as an expense. We will treat it as a loss, but it will go to income statement, right? So now entry is balance, simple. If book value is 0, then entry would be accumulated depreciation to equipment or asset. If it has a loss, then what happened? Up to the amount of depreciation, accumulated depreciation, then this disposal of the equipment loss to the value of the asset. Simple, right? And now selling a plant and asset. So if the cash received is greater than the book value, in this example, we just dispose of, which means this is worthless for us. We just throw it. That's it, for free. Now, what happened if we sell it? This asset is no longer used for us. Its book value is 10,000. But when we sell it in the market, it is sold for 15,000 or 20,000. It means it's a gain. So this is not a profit, because profit is on business operation. Your day-to-day selling and buying, whatever you receive the gain, that is called profit. But because since your core business operation is not selling your own assets, we call this gain, right? So if the cash received greater than the book value, we call this gain. If the cash received is less than the book value, if we sold that 10,000 worth of book value asset as 5,000 or 2,000, so then we call this is a loss. Entry would be, all the scene is the same, just if there is a gain, that will be increasing profit gonna be credited. So gain is going to be credit, loss is going to be debit. Simple. So let's talk about this illustration here. So suppose the FedEx sells equipment on 30th of September. So dates are very, you need to be very attentive to the dates. On 30th September, they sell for 7,300 cash. The equipment cost 10,000 when purchased on January 1st, 2011. They sold it on 2014, and after using it for 9 months. So 11, 12, 13, and 14, 9 months. So 3 years and 9 months they have used the asset, and after that they sold the asset for 7,300 cash. So first you need to find out the book value. After, what is the book value? So you use straight line depreciation for 3 years and 9 months depreciation as well, right? So what is the value here? So 10,000 divided by, so 10,000, because question is silent on this. Okay, no, we didn't did the full question. So it has been